Summer is here and the weather's heating up. Will we see home prices cool down? This is Hanh Jones with the Sweet Life Real Estate Group, helping you live the sweet life. And today we're going to take a look at 5 different metrics that's going to analyze the Humble and Atascocita area and take a look at prices and what's to come. Stay tuned. All right, first metric we'll take a look at for Humble and Atascocita is number of units sold. We hear a lot of press in the news about there's a low supply, there's no inventory, et cetera, et cetera. Is that really the case? Well, if we compare this year's data to last year's data is here in the blue. This year is in the orange. And we can see that the trend starts off the same way. You know, at the beginning of the year, things are kind of soft, people are ramping up, and then into the spring, into the summer, and the number of homes sold will increase. And that's a seasonality trend that we look at. And over here, we can see that the number of units sold is actually 11% lower compared to what it was last year. Is that significant? Well, when we look at the actual numbers, it's on average about 240 homes sold per month last year for the same time versus 220. So it's on average about 20 homes per month. Is that huge? Not necessarily. Is there a supply glut? Well, obviously we need more supply on the market to balance things out, but it looks like homes are actually selling faster. So it's like the number of homes are about the same being sold. They're pretty close, but homes are being sold faster. So with that faster turnover, we're going to see higher prices, right? And which is exactly what we did see. Again, comparing year over year, last year's in blue, this year's in orange. Again, it's a 20% increase, a 20% differential between last year's and this year's prices. Again, a radical increase in prices, but we saw the same seasonality trend that we did last year in this year. So from April to May, we saw a slight softening, more of a flat line in terms of prices for homes sold. And are we going to see that same trend as last year, whereas we come in the summer months, prices continue to escalate, etc.? Or are we going to see a sideways chop? This is going to be very interesting to see as things unfold as we move forward into the summer. So we'll keep an eye on that. The next thing is how fast are homes being sold. This we look at days on the market. And if we look at last year, it is a very, very deep move here. So up here, this is telling us that days on the market, homes were selling on average of 50 days. So it took 50 days for them to get under contract. And then down as we approached the summer, this thing dropped just a hair under 20 days, right? So it dropped pretty precipitously. And what this is telling us that homes were selling quite fast, quite rapidly. After that peak in the summer, coming into the fall and the winter, it came back up and it leveled out to about 44 days on average last year. So far this year, we're about 34 days, and we're seeing the same trend as we come into summer. Will we have this big spike down in July and then will it level off? I don't know, but homes are definitely selling faster, and that's attributing to this the amount of supply that's out there, right? And it's also affecting prices. The next thing, in terms of prices, we want to look at price decreases. We've been tracking this week over week, and this is weekly data here. And what this is telling us that the homes that are currently listed, if they had to decrease their price or not. And when we track this week over week from the beginning of the year, we're talking on average, it was about like 12 to 15 homes per month, or per week, that would have to decrease their price, right? And that was pretty normal. And then down here in February, April, very, very low spike. So like a lot of buying activity, but sellers did not have to decrease their price. However, when we come into May, it came back up, and then boom, we were on average about 15 from the beginning of the year till now, and right at the end of May, it spiked up over 50. So what does that mean? There's 2 implications here. Number one is buyers are getting priced out of the market, which means prices are too high, or they're not qualified on their financing due to higher interest rates or more strict lending guidelines. They don't come up with the money for down payment, et cetera, et cetera. Less buyers are more attracted to houses. That's number one. Number two is sellers maybe just be getting greedy. They're just trying to overprice their homes. They may not appraise, et cetera, et cetera. So they're going to have to decrease their price in order to be attractive to buyers out there. And so we saw a big spike in the number of homes that had to decrease their prices. We're going to continue to track this week over week, especially into the summer months, and see what happens with prices from that perspective. The last thing that we'll take a look at is months of inventory. And what this is telling us is how long will it take at the current rate of buying, how long will it take for the amount of homes that are for sale now to be exhausted? And this is telling us we're right here at 1.5. It spiked down to 1.1, which was the low, probably the lowest of the lows. We were only going back from 2017 till now, but that's pretty low, right? So we were at 1.1 months. And if we look at this from a trend perspective, we were usually hovering right about 3, just above 3, and then it spiked way down. Now, if this thing comes back up above this level here, which is this 1.7 level or the 2-month range, we could potentially see a trend change in terms of prices. This works inverse to prices. So the lower this metric is, generally the higher prices become. And then vice versa. The higher this number, the lower prices become. So if we see a spike above this 1.7 level or this 2-month level, we could expect to see prices softening, if not decline, in the future. But that remains to be seen. We're still very, very low in terms of months of inventory. So if this trend continues into the summer, we will still see elevated prices. So those are the metrics that we have for Humble and Atascocita. We hope you found this useful. If you did, please click on like. We put a lot of work into this, so a like would be greatly appreciated. And at the same time, if you want to take advantage of today's real estate market and you want a pro on your side to help you develop a strategy for you to either buy or sell, please reach out to us. We'll be more than happy to help you out, and we will see you next time.